Well, hello everyone. Hope you're having a fantastic weekend. Today is the 3rd of November, and we're getting pretty close to the elections and pretty close to the end of the year. So, lots of activity should be going on in the markets. Right, today I'm going to be covering a slightly more advanced topic, but all the same, pretty simple. It's called change of polarity. Okay? Change of polarity. Right? We've covered support, we've covered resistance, we've covered breakouts, we've covered breakdowns. So today we're going to be covering change of polarity. So what is change of polarity? Okay, let me explain. Say you have a particular straight line on the chart. Let me make that straight for you. Yep, here we go. And maybe you have prices coming up, bashing its head against this resistance, coming back down, going up again, bashing its head against the resistance, coming back down. And then prices one day manage to break through that resistance point. So they break through this resistance point, trend all the way up. So that's what we have is a breakout there. Usually if prices retrace and they get back to this point, they tend not to want to break this point. They tend to want to come back here and bounce back up. So what's happened is this previous resistance point, all right, has changed from being a point of resistance where prices bang their heads up. It's now transposed and become a region of support as prices come back down and bounce off again from this support region. But previously, it was a region of resistance. So this change of polarity, this change of resistance to support or support to resistance, as the case may be, is what traders refer to as change of polarity. And it's usually useful when you're looking at trading breakouts or breakdowns to watch out for this particular point, because quite often previous resistance points become new support levels and previous support levels become new resistance points. Okay, so to add to the fun, let's go have a look at some charts. Just give me a sec to bring this up. Okay, this is a chart of the euro, right? The euro, and this is October 2011, right? So it's a daily chart, October, November 2000, this is January 2012. So the beginning of this year, end of last year, yeah? So as you can see, okay, we have a bit of a low around these regions. We can probably draw a region of support around these regions, right? Okay. So, as you can see, the euro in October 2011 trended lower, got to this region about 1.3215, right? It got to that low, then trended all the way back up, and then came back down in November 2011, about a month later, still trended upwards, came back down, and then broke through. So this was formerly a region of support, prices bouncing back down, going up, bouncing back down, going up. Now it's broken through. But guess what? When prices came all the way back to this previous support level, guess what? They didn't break through. It became a resistance point, and prices went, bashed its head, came back all the way down, went up again, bashed its head against the previous support level. So this previous support level is now a new resistance point, bashed its head here, came back down, went up again, and finally broke through, and then came back down, and then trended upwards. So you see, this previous support level is now metamorphosed into a new resistance level. So that's pretty much what change of polarity is, and traders use it when they're trying to capitalize on trading breakouts and breakdowns, because more often than not, when price breaks through a support level, it's going to retrace to the previous support level and come and begin to develop as a resistance level. And then a lot of times when price breaks through a resistance level, it retraces, and the previous resistance level becomes a new support level. Okay guys, hope you learned